start this show with a discussion on the markets. Then Dhananjay Sinha now joins in, Head of Institutional Research at Emkay Global Financial Services. Dhananjay, hi, good morning.
Good morning.
First, a word on the internals of the market. We've seen there was a bit of a dip in the month of February, early February. That was bought, and now the market is pretty close to an all-time high. Do you think at current levels the market has enough legs to go to a new all-time high and gain further from there?
Yeah, I think in the near term, I think it's the Modi trade which is actually playing out. So I think as far as the benchmark indices are concerned, I think that's what you that's what we see. Effectively, it's an NDA-led government that the market is actually pricing in, and this is ahead of the event. So I think people do not want to miss out on the event, and the expectation is that if the new government is an NDA government, there will be more proactive investments and growth oriented policies. My sense is that the market seems to be pricing in the event ahead of the event, and possibly we'll have to see how things pan out going forward, what kind of government comes in, what kind of coalition is formed. So I think the market might actually play it ahead of the event. I think the other thing that we have to look at is the internals, and basically what we see over there is that some of these conventional defensive names are making 52-week high, and that is something that has been supporting the markets largely in the IT space, pharma space, and some of the auto names. Today we see also some interest visible in the banking stocks. So I think that's how the internals and the overall broader sentiment looks like at this juncture.
Okay, Dhananjay, I just wanted to come to a couple of specific stocks which stand out. JP Power, which is now down 16% post the deal which is likely to be announced with the Abu Dhabi company, as well as JP Associates, which is down around 4%. What would your view be on the latest news, as well as your view on the stocks in specific as well?
So I think the JP Group is looking at sale of assets. So the hydropower project is likely to be sold to global players. So I think it's part of the deleveraging that the company is actually looking for in terms of sale of assets. So I think as far as the group is concerned, there is a possibility of some improvement as far as the debt equity is concerned. So I think I'm not very sure why the stocks are actually coming off. But as far as the JP venture is concerned, there is a certain positivity as far as deleveraging is concerned and the improvement in debt equity ratio.
Okay. Dhananjay, what about the IT names? Today we've seen some profit booking. HCL Tech is down 4%, TCS is down about 1%, Infosys is down 0.5%. Is this a good enough dip, or would you wait for a better entry point? And what's your overall call on the space?
See, I think as far as the IT sector is concerned, it will continue to, in the third quarter we have seen them performing well. I think what is happening now is that the market seems to be playing up the cyclicals. So I think the reason why the IT stocks are actually coming off is largely because people are trying to bet more on cyclicals. So from a portfolio standpoint, people might be booking some amount of, doing some amount of profit taking over there. But I think that the earnings will continue to surprise on the positive as far as the IT space is concerned. So I think it is more like a tactical position the market may have taken. So if you have to get into cyclicals, you'll need to shave off some of the IT stocks. But I think if I'm looking at 6 to 9 months down the line, these are opportunities to buy.
Dhananjay, how would you approach the entire pharmaceutical space now? For example, Sun Pharma, which is now up 13% YTD, Dr. Reddy's up 12.5% YTD, and all of them have been trading at either multi-year highs or even lifetime highs in the past couple of trading sessions. Would it be a good time to accumulate?
Yeah, I think as far as pharma stock is concerned, again, we have been overweight the pharma sector, so that seemed to have played out. I think what is happening over here is that we are seeing some robust growth coming from global demand, and those are showing up as far in the quarterly results as well. My view is that the pharma stocks will continue to be positive in terms of performance. It is possible that if the market goes overboard on the cyclical, there might be some correction in the pharma stock as well, as we have seen in the IT space. So I would again say that these will provide opportunities to buy.
Okay, Dhananjay, we leave it at that. Thanks very much for joining in. So
Yeah,
that's
bye.
the review coming in from MK. Do watch out for JP Power. Remember that there have been bigger brokerages such as JP Morgan which have downgraded JP Power to neutral. They've cut the target price all the way to 19 rupees per share from 25 rupees per share, and they believe that the risk-return trade-off is no longer attractive. So maybe there is some amount of a reaction or aggravated reaction which is coming in on account of these brokerages as well.